just going to share the screen and let's take a look at some of the numbers that have come up. So a whole bunch of interest rate increases has happened. It's not quite neat yet because I haven't quite finished it, but I'm just going to share this chart. So if it's just this part, look at, hang on, let me just remove the colors for now. And just look at all the interest rate increases. So we had US increases interest rates to 0.5. I'm going to blow this up a little bit. 200%. Okay. So I think the interesting part was almost everyone increased their interest rates, right? We had the US increased 0.5, the Euro followed with 0.5, the UK 0.5, Canada 0.5, Australia a little bit more conservative, 0.25. China also 0.5, Singapore 0.4, sorry, Switzerland 0.5, and Singapore 0.45. So basically, everybody increased its interest rates. I think that was what, I think the message that we're going to get is this fight with inflation, really strong fight. So if you look at the numbers, okay, this is this side, all right. So we have the US at 4.5% inflation. That's the highest at the moment, followed really closely by the New Zealand 4.25 and Canada as well 4.25. And we have UK 3.5, which means that the UK still has, I mean, it doesn't have the highest interest rate, but what it does imply that it has room for increments, right? And we also, of course, Euro 2.5. And I think if we look at the news that's coming up from the Euro side, they said that they're not quite done yet in terms of their interest rate increments. So I think we can expect more increments in the Euro as well coming to 2023, given that their inflation is still one of the highest, the second highest, in fact. In terms of inflation, UK currently has the highest inflation at 10.7. So if I'm looking for the usual fundamental diversion of, let's just pick strongest versus weakest, right? The UK, unfortunately, isn't looking quite the best because it has a 3.5% interest rate, which is not the highest, but, you know, it's above 3%, is really quite high already. And yet its inflation is not going anywhere. It's 10.7. True, it did drop a little bit. It was worse before. It was almost 11 in the previous reading. It's improved a little bit, but it's still a very high 10.7. The Euro might be in a little bit of a question mark as well. It's 10.10. And the previous reading is actually 10. So actually the Euro's inflation has worsened by 0.1 percentage point, which again, it might not be a big thing, but it's the question is, are their interest rates actually effective in bringing down inflation? So I think next, the story in 2023, it's still going to be the fight of inflation. And I think on the back of this, you know, the oil prices, the energy prices, then it rolls back down to, you know, the conflict in Ukraine, which I think everybody has kind of, I wouldn't say forgotten about it, but if you're not quite there, it's around in the background because that story has not ended yet. It's still going on, but I think we're so desensitized to the conflict over there that if we don't go and look at it, we kind of forget it's still there. And that is one of the big question mark of this whole supply demand issue of commodities of necessities, right? We have the wheat from Ukraine, we have the oil from Russia. So there's this whole question mark that we can't quite see very clearly. So I think my gearing towards 2023, it's to kind of stick to the more stable currencies. I will be looking to trade currencies like the Japanese yen, the Swiss, where the governments have already made some kind of decision of where they want to go. The Euro and the US, I'm not too sure about the Euro in the sense that I think it's a little bit too close to the conflict, which means it can fluctuate and is very, very sensitive to commodity prices at this point. So my take for the closer to the conflict currencies will be shorter term trades. The longer term trades will be those which is slightly more stable, the further away currencies. So I'm actually looking at Australia, New Zealand, Singapore, and US. There's no choice. Everybody has got to look at US, but these are the currencies that I will focus on in 2023, given that if the market does change, if we are in a recession, it does mean that there's a new trend coming. It's just a matter of a bear trend or a bull trend. All right. So I think what I am prepared to be going into 2023 is to look up for that elusive turning point. Because again, I think we have been looking at this for quite a while. A lot of the currency pairs, they are overextended. right? Every single currency pair we go to, let me just pull out to the weekly time frame. I think at least half of the currency pairs, they're all at one end or the other. Some have already started moving in a couple of weeks. All right, if we look at the Aussie dollar, all right, it's bounced off. I think this is like the last couple of months. It's already started bouncing off the sort of one extreme. All right, I mean, again, it really depends on China again. So I think there is opportunity to find a trend coming 2023 when it's either we're in a recession and something is just going to go one direction, or alternatively, it can be like what Japan is doing now, nothing, and go sideways. All right. So I think it's going to be really interesting 2023 next year. I'm definitely looking for pound weakness. All right. I know it doesn't seem quite so on the chart. That looks like a really strong bullish pound dollar move in the last, I think, 2-3 months. All right. But I do have a technical level that I'm looking at. And my question mark is, will the pound start to weaken because, in terms of inflation, in terms of unemployment, it's not quite recovering as best as its US counterpart. So I'm looking for weakness in those statistics. All right. The Swiss, I think we're going to, let me just take a look at dollar Swiss. The Swiss is a really interesting currency pair. This is a weekly time frame. All right. And in the last, I think, last month, if you look at this weekly candle, it actually lost it's a huge breakdown candle. Really, really huge breakdown candle. My question is, will it start to stabilize over here? Because the statistics from the Swiss side, it's still pretty decent, I would say. So will it start to stabilize here? Will we find a new trend here, or will it continue to break down to the bottom? So this is one of the currency pairs where it is a little bit more into the extremes. I am looking for opportunities, to find either a breakup or a breakdown, depending again on where the market moves. But again, dollar Swiss is not my favorite pair to trade. I rather take a look at the Swiss yen, only because the Japanese has not been doing anything. All right, they're still status quo. Now the only problem is we have had this whole entire 2 months of sideways motion. All right, but the question is, it's already gone so high up. So if Japan chooses to do something different next year, all right, they choose to change their monetary policy next year or something else, then we will see a huge move one way or the other. It's a question of when will it break up. So I think opportunities are coming because there's a lot of consolidation, there's a lot of overextensions, so we just have to be a bit patient and wait for the governments to make up their minds. And once that monetary policy is decided on, I'm just going to pick strongest versus weakest. And on my strongest list for now, it's unfortunately still the dollar because it is a global currency. The Swiss, the dollar are two of my currencies I would like to look at as strongest. And on the bottom of the spectrum is the Japanese yen. I don't think, unless they change the monetary policy, is the Japanese yen. And probably I would say this is just the three currencies I'm looking at. The rest, I think, just trade your strategy and just use your technical analysis. From a fundamental perspective, it's big question marks, all right? We have to wait for things to settle down before we can have a fundamental play on those. Yeah, that's all for me, Paul.
Cheers, Alexis. Thank you very much. And always great to have a bit of a fundamental look at the market. We've seen some analysis on the FTSE, some analysis on price action and the market in general. And that will wrap us up for TTR, Trader Talk Radio, the analysis show for 2022. We'll be back on the 29th of January with the team. And we'll run out our program at that stage for the rest of the year. But you'll see us back every Sunday around this time from the 29th of January. Alexis, Merry Christmas to you. Thank you. You've had a massive year for us. Thanks for your contribution. It's been much appreciated. And to all of you that are watching us this time, enjoy your Christmas break. And I do encourage you to have a bit of a break over Christmas. Liquidity is down and markets get quite choppy. I know if you're working full time, you get to Christmas and you want to just trade. But it's a tough time to trade, so do be careful. Make sure you control your risk. It's the answer to everything. And thank you, Catherine. And do have a wonderful Christmas and New Year. If you're part of the Actions to Wealth group, we are having a little Christmas wind-up webinar about 6 o'clock on Thursday night. So you're welcome. You'll have a link for that. You're welcome to join us on Thursday night at 6. If you're part of the Bali Trading Retreat, we're doing a bit of a recap on that, a bit of a review on that on Wednesday night as well. So if you were there, make sure you join us for that as well. In the meantime, have a good Christmas. Stay calm. Make good decisions. It all works out if you do. Thank you very much for your support. Cheers, everyone.